Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin, and we're going to be providing an update to the bull market support band. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. Well, I did at least think it would be useful to provide an update this week, especially to the bull market support band, because we have a correction now where we saw Bitcoin drop over 10% in 1 week to below both the 20-week SMA and the 21-week EMA. Now, there is some significance to this because this is the first weekly close below both the 20-week SMA and the 21-week EMA since January, since early January. And those candles were green. So this is actually the first red candle that is closed below the bull market support band for the entire year. Now, if we go back to our general thesis for this year, we have to remember what that thesis is. And it is that Bitcoin will likely spend half the year going up and half the year going down. And the reason for that is, well, I mean, there's a lot of different reasons for it. We can talk about maybe like what we paint the narrative towards. We can talk about, some technical reasons, right? I would say the narrative that I like to run with is that there's so many scams and meme coins that flood into the market in the first half of the pre-halving year, just like in 2019. And the issue is that Bitcoin needs to come back down and flush all of these out so that it cleanses the market before the halving year. Okay, that's the purpose of the flush. And so that when Bitcoin goes on a bull run in say like later on part of the halving year and the post halving year, then a lot of those meme coins and scams have been cleaned out. That's not to say that that some version of them won't return. There'll probably be new ones that launch, and maybe some of the prior ones will go back up. But I believe that is at least part of the purpose of the correction, is to sort of flush these out, because a lot of those meme coins that people were talking about just a few months ago are now just constantly bleeding against Bitcoin. They're putting in new lows on the USD pairs, and most of them will never see new highs again. That's the truth, okay? Now, if we roll back the clock, when we first started this month, and I think a lot in July, we said, look, guys, Bitcoin has always gone below its 20-week SMA and 21-week EMA in August or September of its pre-halving year, right? Let's look at the chart. I mean, don't take my word for it. Let's double check, okay? Because don't trust, verify. Right? We don't trust, we verify. And so what I'm going to do is I'm just going to go, it's over here. I'm going to go grab this arrow tool, and we're going to say, look, in August of 2011, the pre-halving year, we went below the 20-week SMA and the 21-week EMA. And then in 2015, what happened? It occurred in August. We went below it. And in this case, we ended up going all the way down to a double bottom. This was a 50% correction almost from the high, right? This is almost a 50% correction. And it put us at a double bottom. And that double bottom came the week of August 17th. And then last cycle, it occurred in September. We saw a weekly close below the 20-week SMA and the 21-week EMA. And so going into this month, we said, look, guys, there's a lot of people calling for new highs this year. There's a lot of people saying that, it's up only. But if history is any indication, there's a good chance we get a weekly close below the 20-week SMA and the 21-week EMA. Now, there is this idea, of course, that the narrative behind the whole meme coin flush is completely irrelevant, and I can actually respect someone who maybe would say that, because there's no guarantee that that has to be the reason. One of the more likely culprits behind it has nothing to do with crypto. The correction could be primarily due to risk-off conditions in traditional markets, right? Go look at the S&P 500. What do you notice about the S&P 500 here? It's down almost 5% in August. What do you think it was doing in 2019, in August and September, right? So let's go back and look at August in 2019. It went down It closed the month above the 20-week SMA, right? But the correction, right, the correction that it initially got, you can see the wick on here, right? So from monthly open, it went all the way down to this wick. It was a 5% correction. And then you look at 2015. In August, the S&P went down 6%. And then in September, it went down 2%. And then in 2011, we can see the same thing. In August, the S&P dropped almost 6%. In September, it dropped 7%. So rather than go on and spend too much time about fleshing out the meme coins, because you could easily pick that argument apart if you wanted to, just look at the overall market conditions and say, all right, we know that crypto is a risk asset, no matter what people says, right? It's a risk asset. It doesn't mean that Bitcoin can't eventually turn into something else, which it probably will eventually, or at least we hope it does. But then you have to ask yourself, do we really hope it does? I mean, risk assets do tend to outperform, risk-on assets do tend to outperform risk-off assets over the long haul because we're just, there's money printing, right? So it's almost a better thing for it to be a risk asset. But when we're looking at this chart, we say, well, if the S&P, which is likely going to be considered by most people to be less risky than crypto, if it's pulling back 5 to 10% in August or September of the pre-election year, then that can be what causes Bitcoin to go below its bull market support band in Q3, August or September of the pre-halving year. And once again, we have. This cycle is not different. Not at least based on this. The cycle is not different. In fact, it's playing out in a very eerie, similar fashion. What do I mean by that? Well, if you think about what Bitcoin accomplished in 2019, it went up about 4x or so. What I find interesting is that the weekly capitulation below the 20-week SMA back over here was a 20% drop, right? So you went up 4x and you had a 20% drop, which is what kickstarted this, well, I wouldn't say it kickstarted the downtrend. The downtrend really started in June, but once we got below the 20-week SMA, that was more or less all she wrote, right, for a while. I mean, we did pop back up here and retest it, and we even rallied above it, and then we fell into a recession. So something like that could play out again, right? But this was a 20% drop after a 4x move, more or less. This one was a 10% drop after a 2x move. So it is really interesting how, through the ages, there's a lot of similarities, right? And mathematically, you can look at a lot of the similarities, right? How over here it rallied up 4x and the capitulation below the 20-week is 10%, and then over here, or 20%, and then over here it went up 2x and how the capitulation below it was 10%. The other thing that I find interesting is that a lot of people have given me a hard time this year for saying that in the pre-halving year, Bitcoin goes sideways, right? A lot of people have given me a hard time about that. And I can kind of understand the reasoning for that, right? Because Bitcoin has gone up about 100% this year, right? About 100%, which is reasonable, right? I mean, in what market do you call a 100% rally sideways? In this market, if the bull runs are 2,000%, then you would have to consider 100% rallies and 50% drops sideways. Because if you don't consider that sideways, then there's basically nowhere on the chart that is sideways. If you still don't believe me, I imagine many people here would look at 2015 and call it sideways. Would you not? If you had to pick out a period in this chart here and say, what was the area in the chart, what was the area in this chart that looks the most sideways? Would it not be this range right here, right? That's the sideways range because this is down and then this is up, okay? This is the sideways range. But if you would agree that that is the sideways range, then would you not find it interesting that from the low to this high, Bitcoin rallied about 90%? So if you're going to call 2015 sideways when Bitcoin rallied 90%, how can we not call 2023 sideways with Bitcoin rallying about 100%? It's more or less the same thing. I mean, there's not a huge difference there. It's more or less the same thing. The reason that when you look at 2015 and we call it sideways and it makes sense is because you see what eventually came after it after we got a double bottom. But when you were living through it, right? Many people here did not live through 2015. When you were living through it, if you down here said, all right, Bitcoin's going to go sideways for this year, and then you watch the price rally up 90%, almost 2x, do you think people would have said that that was sideways? No. They would have called you, they would have said you were wrong, right? How do you call it sideways? It's up 100% almost. And then it dropped back down. And then it went up again. And then it dropped back down 50%. And that 50% drop put in a double bottom. A 50% drop from these highs would basically put in a double bottom, right? I mean, basically a 49, 50% drop. That would put in a double bottom. So when we look at these charts, if you're going to say it's not sideways, then maybe we need to redefine what sideways is. When you have an asset class that can climb thousands of percent, in a bull market, then we have to understand that a period of 2x rallies and 50% drops should be considered sideways. It's like when you look at like the monthly returns for Bitcoin, and you look at prior pre-halving years, right? 2019, 5 of the first 6 months were green, 5 of the last 6 months were red. 2011, 5 of the first 6 months were green, 5 of the last 6 months were red. 2015, 4 of the first 6 months were red, 5 of the last 6 months were green. So in basically all cases, right? I mean, in two of the prior pre-halving years, it was 6 green and 6 red. And then in one, it was 7 green and 5 red. But in all prior pre-halving years, we spent about half the year going up and half the year going down. And just like 2019, just like it, we have all the narratives coming out about how this will be the time that is different and how the peak's going to be shifted and how we're going to go to new highs in 2023, and how we're going to hold here and everything's going to be fine, and how, this time is different. And yet here we are, after all the narratives, they get thrown out the window, typically in the second half of the pre-halving year, you find yourself getting a weekly close below the bull market support band. Now, with that said, we need to be open-minded, at least to the path of what comes next. Because unfortunately, you might want me to tell you exactly what that path is going to be, but with a good conscience, I cannot do that. And the reason is because, well, if we take the context of history, you can find two very different outcomes as to how the secondary scare ultimately ended. Last cycle, it was a very slow and painful process. I would prefer to not repeat that process, right? What would you prefer? If you knew that the secondary scare had to continue and you said, all right, well, would you prefer it happen over the next 2 weeks or the next 6 months? You'd probably say, all right, even the bulls, right, would say, all right, well, let's just rip the Band-Aid off, get it over with, and then we can move higher, right? That would be probably what most people would say, even if they're bullish, right? If you say, well, there has to be this moment where we still wreck the bulls. Would you rather it be drawn out over 6 months or 2 weeks? You'd probably say 2 weeks. Last cycle, it was pretty painful because this move last cycle from this high to this low lasted 37 weeks, right? It's about 9 months, about 9 months of a downtrend before we really got moving again. And we didn't get really moving again until QE came back in all its force, okay? And we're probably at least 6 months away from that, at least. So there is at least some precedent, there's at least some reason to think that it could be a more long and drawn out process rather than an immediate event. And based on last cycle, what you could see is to hang around these levels for a little bit and then go back up and back test the bull market support band just to draw that money back in, right? Only to get rejected and then come back down, rally above it. I remember in 2020 when we rallied above it, because there were a lot of people talking about the hash ribbons and whatnot and how it was the birth of the bull market. And then a few weeks later, we rallied up into a recession. You can call it a black swan, you can call it what you want. We had an inverted yield curve and it ended in a recession. It doesn't tell you what's coming, but it tells you the economy is sick. And all it's going to do, all it takes is just one more thing to really hit the economy pretty hard. Okay, and we can get into the nuances of a lot of this stuff maybe in another video. But That's what happened. It was a long and drawn out process that lasted approximately 9 months. If we were to repeat 2019, which I hope we don't, but if we did, 37 weeks would put you out in April. Okay? So I believe I said that this was 37 weeks. Maybe not 37. No, 20. I think I maybe got this one slightly wrong here. So it was 24 weeks. 37 weeks from the high, right? So 37 weeks from the high. That's what it was. So 37 weeks from the high, 24 weeks from where it dropped below. So 37 weeks from this high would put you out in late March. 24 weeks from where you break below would be a little bit better, right? It would only put you out in January, okay? So that would be the more painful process, a slow and systematic bleed with occasional pumps back up to the 20-week just to get people excited, okay? That's one process that we could go through. But what's another one? And this is the reason why we cannot go into this thinking we know what has to happen. Because if you go into it and say, well, without a doubt, it's going to repeat what it did in 2019 and back test it, what happens if it doesn't, right? What happens if it does a 2015? In 2015, we basically just saw an immediate capitulation down to a double bottom, okay? And the benefit of that scenario was that it just wiped everyone out like that, as opposed to over 9 months. You might say, well, how's that a benefit if people get wiped out? Well, if the argument is that the bulls have to get wiped out before the halving, would you prefer to just get it over with or to have it drawn out over the next 6 to 9 months, right? I mean, in that, if you had to pick one of the two, I would prefer the former, where you just get it over with, right? How could that happen? Well, if something breaks, right? I mean, we just went through the most aggressive Fed tightening cycle that we've really ever seen, at least in recent history. And because of that, there is a chance that the Federal Reserve has gone too far, and there is a chance that they will break something. And if they break something, it could lead to cascading liquidations, right? An event that you don't know exactly when it's going to occur, but when it does occur, you can move down very quickly. In 2019, after Bitcoin rallied back above the 20-week SMA, Bitcoin at that point capitulated going into the recession, and it dropped over 60% in a month. A 63% drop in 1 month, right? Now, I should not have to tell you what that would be like and how difficult it was back then to navigate that, because it was a huge move to the downside. We all woke up one morning, our entire portfolios, including my own, was down like 60%. We're just like, what the hell is going on? Like, I remember pulling in my portfolio and loading it and seeing Bitcoin at like 4K when I woke up. And I was like, well, that can't be right. And I loaded it again. I was like, it's 4K. How could it be at 4K, right? Like, we were just at 8K. How is this possible? Remember, Bitcoin can drop like this at any moment. And without notice, it can do this. And the reason it could happen is if something breaks in the economy. If you go back to the macro, to the macroverse, and we look at yield curves, treasury yield spreads, and we look at the inversion of the 3-month and the 10-year, you can see quite clearly that when you're in an inverted yield curve, you often do not have a recession, although the 1980s would like to have a word about that, because in that case, we did have a recession even when it was inverted. But a lot of times, the inverted yield curve does not tell you you're in a recession. It tells you that one's going to eventually come, just like we had an inverted yield curve in 2019, and then a recession eventually came. Now, had we not had the pandemic, it doesn't mean that we would have avoided a recession. Perhaps something else would have brought it on. But the point is that without fail, inverted yield curves have come before recessions. It's kind of like the same thing with Bitcoin, and how every pre-halving year, people want to believe that it's going to go to new highs and shift the cycle peak, and then it doesn't. And it just goes back down and does the same thing it always does. In the same way, we look at treasury yield curves and we have all these people saying, well, why this time is different? And the reality is it's probably not. We're probably going to see the uninversion of the yield curve at some point, and we will probably get a recession at the end of this business cycle. That is the most likely outcome based on what we've historically seen. And you can see that in recessions, the S&P doesn't tend to hold up well. So if the Fed were to break something, and if it were absolutely catastrophic, then it could force them to pivot far earlier than most people are anticipating. Myself, I don't actually think the Fed will start printing again until 2024, is my guess. That is my guess. I don't think we're going to go back. I don't think they're going to pivot until 2024. But I could be wrong. I mean, they could pivot sooner. Imagine if the market, I mean, just imagine a scenario, right? Imagine you wake up one day in, let's say, November or something, and the S&P is sitting at like 3,400, and it's just dropping like a rock. They would probably pivot in that environment, okay? Let's say it happens in early 2024. They would probably pivot in that environment. So they will likely pivot at some point in the next 12 to 18 months, but it's really hard to know exactly when it's going to be, right? It's really hard to know that. You also should remember that bonds typically bottom first, right? Because once the Fed pivots and the long end of the yield curve gets completely repriced, almost immediately, and that's why bonds tend to bottom first, and then stocks bottom after bonds, right? And then real estate later on. But crypto, I think, could bottom somewhere between bonds and stocks, right? Somewhere between bonds and stocks. So that's something that we have to keep in mind. And that's not to say that the S&P has to be going into some type of massive capitulation now. It might not be. Remember, in 2019, we had this correction in August and September, and then the market still rallied in Q4, and then the recession didn't come until the early part of the election year. So there's a chance that something like that repeats itself, right? Where you see the S&P get this seasonal correction and then still rally in Q4. Maybe it doesn't have to be a new high, although it could be. And then we face the music sometime in 2024 if the unemployment rate doesn't start to make its move between now and the end of the year. There's a chance that happens. But I will remind you, in the environment where the S&P goes up in Q4, right? Like, I'm not saying that it will, but if it does, that doesn't necessarily mean anything for Bitcoin. And if you don't believe me, go take a look at this chart, right? So let me flip this over here. Move scale to left. Actually, I want to create a new scale. Let me just delete this really quick. So I want to add Bitcoin USD to a new price scale, and you can see here, right? Like the S&P was going up in Q4 2019, Bitcoin was going down. So in the correction by the S&P, you can see that even if it holds the 20-week SMA like it did in September of 2019, it doesn't mean that Bitcoin will. And Bitcoin hasn't, right? I mean, it's already below the 20-week SMA, even though the S&P is still above it, right? So you could get a scenario where the S&P bounces off the 20-week SMA, and perhaps it leads to Bitcoin back testing the bull market support band, just like when Bitcoin bounced, right? Just like when Bitcoin bounced here off its 20-week SMA, what happened to the altcoin market after Bitcoin bounced? The altcoin market back tested its 20-week SMA. And I can't tell you how many people on Twitter keep calling for alt season on every single lower high. Every single lower high. And I know because I've been there and I've done that. And I fell for those narratives in prior cycles and I learned my lesson. And look at this. Every single one of these has been a lower high. And every single time, people have come out from everywhere to dunk on people who have been bearish on altcoins. But every one of these moves was a lower high by the altcoin market. Every single one. So when people say, when are you going to turn bullish on altcoins? Well, first of all, why don't they put in something besides a lower high for a change? I don't think I'll wait for that, or at least I hope I don't. But I could see a scenario where the altcoin market does something like this, right? Where it slowly fades down, maybe gets another bounce, and then we go into the depression phase of the cycle. Similar to altcoins capitulating into a recession, just like we had in early 2020, and then we come out of that, and then we go up. The issue is no one knows how deep this goes. It could stop shallow at 250 billion. It could go a lot deeper, right? I mean, for all we know, it could capitulate all the way down here to 200 billion before going back up, right? And if it goes to 200 billion before going back up, think about that, right? Like if it were to go all the way down to 200 billion before going back up, just think about how badly the altcoin market would get wrecked in that environment. So I can't tell you how low it's going to go, but I will say that if Bitcoin does spend the rest of the year in a downtrend like it did in 2019, then that's not good for the altcoin market, you know? And I mean, I deal with people every day, FOMOing about these altcoins, and I don't get it, I mean, a lot of them, like ADA, it's also putting in lower highs for the most part. I mean, now people are dunking on me because ADA's at 27 cents. I'm like, guys, it's barely off the lows, Dot's at $4.50, right? It's basically at the lows here. Avalanche put in a new low recently, right? This candle here, this is a new low. Look at this low. This was 990. The prior low was 994. Going back to the thesis that we said going into the year that Bitcoin, even if Bitcoin doesn't put in a new low, most of the altcoins will. And we saw a lot of altcoins put in new lows earlier this year, and we're seeing altcoins put in new lows even as we speak today. And imagine what happens to those altcoins if Bitcoin retraces any part of this move. If it retraces back down to 19 to 20K, what do you think happens to alts? They probably put in more significantly new lows. What if it retraces to a double bottom? What do you think happens to alts? What if it's a lower low, right? What do you think happens to alts? And that's the reason why I've said for the last, 20 months now, altcoins are just simply not worth the risk. It doesn't mean that no altcoin's going to go up, and I would congratulate those that have picked altcoins that have seen considerable gains. It's just that over the macro scale, most altcoins will likely perform pretty badly. And I got a lot of people talking to me about the Bitcoin dominance. I know you guys are curious about my thoughts on it, but I probably should reserve most of my thoughts for a full dedicated video, because once I start talking about the dominance, I can't really stop for the next 40 minutes, and I don't want to put you guys through that because this video is already getting somewhat long. But just provide one brief perspective on it. Take a look at total 3 minus USDT divided by Bitcoin. Look at this chart, okay? Just look at it for a minute. And remember that the altcoin market tends to peak at parity with Bitcoin. At 1, right? Look at this chart over here, right? It peaks at around 1. That's where it's peaked the last 2 cycles that you can see. At least on this chart. Peaks around 1. And then it bottoms out around 25%. Right? 25% here and around 25% here. Here it went lower to about 18%, but this was in Bitcoin's parabolic bull run. And this is why there is a reason that some people would just consider the strategy of Bitcoin only until the parabolic rally. You would miss the lows on alts, of course, but you wouldn't necessarily miss the lows on all the other Bitcoin pairs. Because if altcoins are all the way down here at like 18% of Bitcoin's market cap during Bitcoin's parabolic rally, then from a mathematical perspective, just being Bitcoin heavy through the Bitcoin parabolic rally in the bull run in the halving year or the post-halving year would not be a bad strategy, right? I mean, just look at the chart, right? Don't take it up with me, take it up with the data. But when you also look at this chart, what do you see? You see that it's rallied back up, to the bull market support band, or in this case, the bear market resistance band. Where is that at? You can see that the altcoin market right now, just taking out USDT, is 48% of Bitcoin's market cap. The 20-week SMA of this metric is at 48%. The 21-week EMA is at 50%. So yes, a lot of people are dunking on me recently because the dominance has fallen back down. But I previously said that the dominance could fall back down and retest the breakout point. See, I'm getting into the dominance. I need to sort of pivot back to what I'm trying to stay on topic. But even last cycle, you can see that once we hit these levels, we got a bounce back up to around that 50%. In this case, it went up to about 53%. And then it rolled back over and went down to 25%, right? So yes, there's also an example here where it rallied more and it took longer. But eventually, it went down to 25%. Look at this. Ever since 2021, it's just been lower highs and lower lows. And every single time the altcoins rally against Bitcoin, it draws people back in. But be aware that this was the area that we rallied from in 2019. We came up and then we capitulated into September of 2019. Now, there are some nuances to it that we could look at that, that you could argue there is reason for us to spend more time in this region bouncing around. And again, I'll talk about that more in a Bitcoin dominance video. But I do want people to look at this chart and to say, you know what? Maybe this time isn't different. Maybe the altcoin market just has rallied back up to the 20-week SMA and the 21-week EMA just to suck more people in, only for them to get wrecked again. It's happened for 2 years now, right? What's a few more months of it? So just please consider that. And again, if I'm wrong about this and it rallies above it, then so be it. So be it. I still have saved myself from the headaches of the altcoin market for the last 20 months. And I still think that they will mostly go put in new lows. Many of them probably will. Okay. Remember last cycle, the total 3 did not even bottom until 2 months before the halving into a recession, right? So if it does it this cycle, that might mean it doesn't bottom until like February of 2024, for all we know. It could just bounce around in here for a while, go into the depression phase in late 2023, early 2024. Everyone sells their altcoins into the recession headline, only for QE to return and kick us into another bull market. So, Bitcoin has gone below the 20-week SMA. The other thing I'd like to point out is there is precedent to look at this and say, well, what if it's a fake out? It could be. Anything's possible, right? Normally what you look for is you look for one weekly close and then you try to look for follow through, right? If we just get a candle in the next week or two and we're back above the 20-week moving average, then you could probably call it a fake out. But if it just plays out exactly like it has previously done in every prior pre-halving year, there's a good chance that won't happen. Doesn't mean that it can't backtest the 20-week SMA. And for the record, right now the 21-week EMA is at 27,662. The 20-week SMA is at 28,426. So you're essentially looking from 27.6K to 28.4K. So about an $800 range in there, approximately, as to where that bull market support band is. So yes, you could get a backtest of it, but unless you're getting weekly closes back above it, then we likely are in for the continuation of the secondary scare. And that the secondary scare sort of consists of this idea of we flush everyone out before the halving. And it also is, of course, likely going to occur because we're not looking at any QE from the Fed, at least anytime soon, more than likely. The only way that we do get QE from the Fed in 2023, I would imagine, is if we get some big capitulation scenario, right? But if that happens, then that means there'd be a windfall coming for the cryptoverse. So no matter how you look at it, whether it's a slow bleed, whether it's a capitulation, the secondary scare does still seem like it's in full swing. And if it's a fake out, then you would still need to see weekly closes back above the 20-week SMA within the next week or two. Okay. The issue, of course, though, is we are coming up on September, and historically, September is on average, anyways. I believe September is the worst month for Bitcoin. If you go look at monthly returns, the 2 months on average that are red are August and September, but on average, August is not as bad as September, right? September tends to be a bit worse. On average, -7%. The standard deviations of this stuff are quite high, so it's not really statistically significant to say, well, it has to go down this amount. But you can see that there is some seasonality, and legitimately the last 6 Septembers have been red. Maybe lucky number 7, but the last 6 have been red, and every year we make the video on the first day of September, wake me up when September ends, and we say, all right, guys, September's probably going to suck. And when I say that, everyone comes out and says, all right, no, this time is going to be different, and then it ends up sucking, right? So we'll see if this time is different, but history shows that September tends to not be that kind to us. I mean, in 2019, September was pretty bad. It was a 14% drop, right? It was not fun at all. So do at least keep that in mind that September is coming up. It's not seasonally a great time for stocks really either, and cryptocurrencies. And if Bitcoin is below the 20-week SMA going into September, then that is likely not really the best setup for these riskier assets going into that seasonal time of the year, which does not tend to favor risk assets in general. If Bitcoin were above the 20-week going into it, then at least we'd have some hope maybe of trying to hold it. But if we're below it already, then there's some reason to believe that we would just get rejected on any retest of it. So the last thing I want to mention is just to sort of go through the charts here, right? So you can see again that Bitcoin has fallen below this in mid-August. What is really interesting is if you look at total 3 in 2019, total 3 fell below the bull market support band in mid-July. Mid-July, and then Bitcoin, let me just flip this over here. So let's pull this up. If I can find total 3. So in 2019, right, in 2019, total 3 fell below this in July, and then Bitcoin fell below it in late September. So 2.5 months, 2.5 months later. This cycle, what happened? Total 3 fell below it in early May, right? So you take it out early June, early July, that's 2 months. Early August, 3 months. 3.5. Took 3.5 this time. Because again, the altcoin market fell below it in early to mid-May. Took 3.5 months. But again, it shows you, I said, what did I say back in April, right? Total 3 is showing that the market is weak. Just like it did in 2019, right? Just like total 3 showed the market was weak back over here. The market was weak over here. It showed you what was going to come for Ethereum and then Bitcoin. And how did it not do the same exact thing, right? Total 3 dropped below it in July. Ethereum then dropped below it back over here in late July. And then Bitcoin dropped below it in September. And then what happened today? Again, basically the same order of things, right? Total 3 dropped below it first in May. And then Ethereum dropped below it really like a couple weeks ago or so. If you zoom in here, you can see that Ethereum was already below the 20-week SMA really in late July. And then below the whole thing this past week. And then Bitcoin fully below it, right? Bitcoin was still above the 20-week SMA, even though Ethereum was not. People keep telling me ETH is outperforming Bitcoin, but, I keep seeing just one lower high after another. So it more or less happened in the same order. I don't think that this time is different. And we're probably going to see the continuation of the secondary scare for a while. And I think people need to be prepared for that. If I'm wrong, then I would, the signs of invalidation would be to get weekly closes back above the bull market support band. So if that doesn't happen, then I still think the primary thesis of the secondary scare is still very much intact. I think we'll go ahead and wrap it up there. Make sure you guys subscribe to the channel and give the video a thumbs up. And again, do remember we do have ITC Premium into the Cryptoverse Premium. We have thousands of charts on cryptocurrencies. We have them on equities. We have Macroverse charts as well. We have a lot of different things. You can check it out. And we do have several different tiers available if you're not aware. And one of them is a free tier, in fact. So you don't even have to spend any money, right? I mean, just check out the free tier. There's a DCA tool that you can use, which I think is actually quite helpful. And for many people, that's probably all you really need. Right? It's some type of DCA tool to better navigate the cryptoverse, just so you can see what's what and who's who, and which cryptocurrency is outperforming the other ones, just so you can get an idea of if you're just pouring your money down the drain into an altcoin that's basically going to zero, or if the one you're getting is at least holding up marginally well. Just make sure you check it out. IntoTheCryptoverse.com, links down in the description below. Thank you guys for tuning in. Give the video a thumbs up and subscribe. I'll see you guys next time. Bye.